Well, I'm here with another trading update. I just finished writing the blog, so I'm probably just going to read it to you. As you know, I started buying call options on the S&P at the end of last year. I made a big chunk of money earlier in the year buying NVIDIA options, and I took about $100,000 of that and rolled it into another investment. And in January, I turned that $100,000 into 2.5 million. Now, Congress passed a bill slashing corporate tax rates back in December. Now, the last time corporate taxes were reduced so much was back in 1986. So I looked at how the market reacted at the beginning of 1987 and saw a huge spike in the value of the market in the first quarter. Now, I wanted to bet that the market would react in a similar fashion. If I just bought stock, I'd make maybe a 10 to 15% return on investment if I was right. So instead, I bought call options, basically the right to buy stock at a certain price at a certain date in the future. If the price of the stock goes up and is worth more than the agreed price of the option, called the strike price, you get to pocket the difference. Now, when you buy options, if the strike price is well above the current price, you can get them super cheap because the odds of the price going up that much in a limited time are slim. I bought a ton of these options out of the money, about $100,000 worth. Now, instead of profiting like I had $100,000 in the market, the leverage provided by the options meant I could profit as though I had many millions of dollars invested, so long as everything went up. Well, January of this year turned out to be one of the best months ever for the stock market. The value of the options skyrocketed, some by as much as 5,000%. I was right, and 1987 was repeating itself. I was excited by the massive gains, but there was one nagging issue. Going back to 1987, I saw a problem. There was eventually a large crash known as Black Monday that wiped out most of the gains for that year. I also knew we were currently going through one of the largest stretches of market history without a substantial pullback. I was pretty sure the market was going to go up and fast, but it was like a game of hot potato to lock in gains before a major correction happened. With that in mind, I actively sold off chunks of the investment as it went up in January. Like stocks, options can be bought and sold at any time and go up in value as the underlying investment goes up. Since I didn't know if or when a correction would happen, I wanted to make sure I locked in as much profit as possible. That turned out to have been a good decision because as soon as February hit, there was a correction that wiped out all the gains the S&P made in January. While I took a hit to the options I was still holding, I was lucky enough to have sold the majority of my stake on the way up. All told, I locked in $2.4 million of profit in January off an initial investment of $100,000. That's a 2,400% return in a single month. Now, the tax bill is going to be huge, but there are worse problems to have. I'll set aside a chunk of the profit to have fun with, but the rest is going to be reinvested. Now, if you want to know what my next moves are, just subscribe to this channel. And if you're interested in figuring out how I got to a point where I could trade millions of dollars in the stock market, check out the book on making money on Amazon. It details the steps I took to double my income every year for 7 years in a row and how anyone can apply the same principles to get ahead as an employee or business owner. Until next time, thanks for watching.